don't. And so we'll have a good idea of what kind of refunds are out there. And whenever we look, it's always 20 years old. Some refunds are 20 years old, dating up to present day. And then they're getting new refunds that haven't been cashed. So we'll fill out the applications. Really, all we need is signatures from corporate officers, and we get back major refund checks. One client just got back a $4 million check.
Welcome to Business Insights powered by InfoSync. According to the Bureau of Labor Statistics, the national unemployment rate rose to a record high of 14.7% in April 2020. As of May this year, the official unemployment rate is 5.8%. Today, I'm speaking with Joe Franzetii of ValeU Group to discuss the impact of unemployment on employers and the opportunities many companies are unaware of that could help them navigate the complexities of unemployment claims, taxes, and the unknown opportunities that could save them money and resources. Joe, thanks for joining me today.
No problem, Ashley. Glad to be here.
So your main services are unemployment tax planning, unemployment claims, the refund and recovery program that we're going to talk about here in just a little bit, and then worker opportunity tax credits, correct?
Mm-hmm.
Right. Yeah, awesome. So going into tax planning, as an expert on reducing unemployment costs for Fortune 500 companies, you know that quarterly unemployment taxes can be one of the most costly areas of business. What are some common mistakes teams make when filing quarterly unemployment taxes, and what are the consequences?
Sure. Well, what's most important is knowing what rate to pay at. So most companies, they never get a copy of their unemployment rate notice at the beginning of the year. Either it could be a mail problem, it's a third-party issue where they have power of attorney and they're not sending the rate notice. So most companies make mistakes on their quarterly taxes because they don't have the right rate to pay at. And then if they, reorganized or did something to trigger a rate change, they never received the notice. So it's important to look at every quarter based on what you were issued at the beginning of the year. And that's part of the audit we perform. So you got to know what rate to pay at first before you can be sure you're paying at the right quarterly unemployment taxes. And the first quarter is always the largest because unemployment is taxed at a wage-based cap. You're not paying on gross payroll, you're paying on taxable wages. So what you pay in the first quarter is generally 75% of your cost to the state for the year. So it's a good one to get right.
Gotcha. So we know the CARES Act affected organizations in many ways. Filing quarterly taxes is already complex for multi-unit companies that have employees in different states, especially like you mentioned, since each state has a different tax rate. How did the CARES Act affect unemployment tax planning for employers?
All right, so this was a big deal, right? I mean, unemployment was the biggest issue. Before last year, unemployment basically was, maybe they thought of it as a cost. Most companies look at it as they had to process unemployment claims. But after last year, or during last year, it became the single greatest priority in corporate America, because before, when you had 5% turnover, 10%, maybe high on retail, now you have 70% of your employment that's filing an unemployment claim. So it was absolute chaos. And then you throw the fraud into that. So what the CARES Act did is really, number one, it was paying a lot of money to these people while they were laid off, right? And giving them, some cushion. But also, it's artificially keeping the rates low now for 2021 and maybe even into 2022. After that, I think we're going to have more of a rude awakening because the government funded. I mean, they basically printed money out of thin air. They've given it now to the states to cover all these benefits that have been paid out, whereas they normally would just increase the tax rate on the client, right? They would increase a factor in the rate schedule. They would move the rate schedule to a higher one. And that's what really should be happening, I mean, in a normal world. But the government did pay a lot of money to the states. So what the states are doing is they're minimizing the impact to employers when they pay unemployment, and they're kind of keeping the rate stable. Now, not every state, and every state is different for unemployment. So a couple of states like New Hampshire, Arizona, are issuing higher tax rates no matter what. New York has already moved to a higher rate schedule. But a lot of states are refunding companies money. So they issued a higher rate at the beginning of the year. And now because they got all the government money, they're revising the rate and issuing refunds. So most companies don't even know they're going to get big refunds in a handful of states. And Florida is one of the biggest. So it's a little bit inconsistent, but you really are paying somewhat of what you paid the year before in 2021. So 2022 is going to be a big projection, which we'll do for our clients and give them to you.
Awesome. Sounds like 2022 will be a good year for restaurants and multi-unit companies to start bouncing back from the conundrum of COVID-19 and all of the regulations that came into play.
Well, I hope they're back already, you know?
Yeah.
I can eat out now. Yesterday I ate out, you know, mask free.
Yeah, but I miss that a lot, you know, being able to go enjoy dinner somewhere that's not at home with.
Tell me about it. Tell me about it.
So it's nice. So you mentioned unemployment claims. You know, like we mentioned at the beginning, the unemployment rate reached record highs in April 2020, at a time when employers were scrambling to navigate the business strategy during the shutdowns. Unemployment claims increased dramatically. Wow, that's a mouthful. What was your experience with the influx of unemployment claims, and how did you see this affecting companies, and how did ValeU manage this?
Well, again, across the board, right? So you were seeing 100, 200, 300% increases on unemployment claims volumes that were coming into clients. And, you know, a lot of companies have consultants like us that are actually managing the process for them. The companies that had no one really, I mean, had the biggest problem, right? Because we were staffed and we already had overages included in our contracts. So we knew if they went over, we would be safeguarded, right, with fees. But your average company that didn't have a claims management firm, you know, really took a hit and, you know, probably went underwater with the amount of claims because every claim has to be responded to, even during the pandemic. And then when you put the fraud claims on, it was almost double the amount of the normal obscene amount of claims that companies were having. And those claims had to be responded to too. So it was utter chaos for most companies. For us, obviously, you know, it was hands-on all the time, but it also gave us a great insight because we were at a much higher level then. You know, if we're normally working with the directors of human resources, the director of tax, the director of finance, now I'm working with the CEOs of major corporations because they were directly involved with, okay, we want to get our employees to a certain number of hours so they could still collect the $600 kicker, and we help them with the back house calculations. So again, what I mentioned before is the rates are fairly stable this year in 2021. But something for companies to look out for. And I guess, you know, look, it's being part of a good partner, right? If you have a partner for unemployment, we have a cap in our contracts with our clients, right? They sign for a fee. If they go over on the claims, we charge X amount of dollars. And it's always negotiable. Always, especially in the time that just had. You're not going to send them a bill for 5 times their business, but some client companies did. And you got to watch out because this is a time of you know, great deception too, right? People are trying to get things that they never had before. So if companies want to overcharge you on the unemployment claims volume, you know, you have to know what the industry average should be. And really, you know, our charge is $12 over a claim. Other companies charge up to $30, $40. So it could have been a massive cost if you had a consultant too that you weren't prepared for.
Right. Okay. So I understand there is a huge opportunity for companies to obtain refunds through unclaimed property and refund recovery. Is this a service that is often overlooked by companies?
Yeah, well, look, our whole philosophy is reducing a company's cost. Also, a good answer today is better than a great answer tomorrow. And a phone call is worth 100 emails. But we're here to reduce a company's cost and show them how we're reducing that cost. Fighting unemployment claims only reduces one piece of the unemployment rate calculation, will directly or indirectly impact the cost. What we do is we go back in on 2 fronts for refunds. One, in unemployment taxes, right? If a company overpays its quarterly unemployment, we'll request that refund, and that happens often. If they are issued a revised rate, we'll request a refund. If they restructure, we file an application, the rate is changed, and the company overpays, we request a refund. So for unemployment tax, there could be a lot of instances where we would be getting back hard dollar refunds for our clients. Unclaimed property is an area that really, you know, there's very few companies out there that do it and very fewer that do it well. But when a company is paid money, and they never cash that check. Let's say the person leaves, it goes in the drawer, they throw out the check, they don't care, they're mad at the company, that check isn't cashed. Whoever paid the company has already gotten it off their books, and that's the achievement process on the other side. But who's being paid never received that check. If you don't cash it within a certain amount of time, that then goes to the state trust fund of the state it was paid out in. So state trust funds have over $500 billion in unclaimed property refunds. So what Jared Vale created with an incredible IT team here is a program where we can actually type in the name of a company, and each state trust fund will then pull up all the open accounts. Some states show the money, some states don't. And so we'll have a good idea of what kind of refunds are out there. And whenever we look, it's always 20 years old. Some refunds are 20 years old, dating up to present day. And then they're getting new refunds that haven't been cashed. So we'll fill out the applications. Really all we need is signatures from corporate officers, and we get back major refund checks. One client just got back a $4 million check, a major bank. So, we're getting money like that back in, and the clients we handle for the most part are Fortune 500, but yet a lot of smaller firms too. And I will say, what you do for the smallest companies, what you do for the biggest, you should always do for the smallest as well. So, there's an equality there with our clients, but refunds are enormous. And I don't think there's any client we went into where we didn't find a big refund either through unclaimed property or unemployment tax in the initial review. So it's there.
And that initial review for the unclaimed property, that's free through ValeU, right? For the analysis?
Always. All reviews are free initially, right? We want them to come. And what are we going to tell them? You pay us and then we'll do some work? No, we have to show them and then they pay us, right? We show what a good job we could do. Generally, we ask for very specific documents. For unclaimed property, we only need to know what company it is and what their subsidiaries are, and then we could do the search on our own before we ever get in the door. So we can come to companies with that. For unemployment, we would need copies of unemployment quarterly returns, just the summary pages, and state unemployment tax rate notices, maybe 1, possibly 2 years. With that, we can give you companies their entire picture for unemployment, how much they spent in the last 2 years, where their opportunities are, and how we can reduce their rates. And generally at that point, we make a proposal.
Sounds good. I have to say I'm really impressed and just really love how ValeU looks at the success of your clients and your purpose and your vision behind the people that you serve. Can you elaborate a little bit more on that for me? I know you mentioned it before our call earlier.
Well, it all boils down to what's important to the directors, the owners, because what's important to them is going to spill over what's important to the employees, right? If the owners are concerned about the bottom line constantly, and that's all they're thinking about, then the employees are going to have anxiety because money alone is not going to fulfill anybody. It's about the families that are here now, right? So we've got these Barnett employees that, lost their jobs. Some of them got out early, but they have families. We have families. I have 2 children myself. We treat the clients like their family. It has to be something greater. So when you have a serve first mentality, you can't lose, right? You don't think about selling your company. You're not thinking about making money. And when you're negotiating with clients, generally we go from what we could save you perspective rather than how much paper we're processing. So, it doesn't even matter what the other companies are doing. They're billing on, processing paper day in, day out. We're setting our fees based on what actually we can save you. So, and that always works itself out, right? If we tell a company we can save $1 million and we charge them $20,000 overall for all the work we're going to do, that makes sense to them. But when you have $1 million refund and you charge them $400,000, that doesn't make sense either. So you have to always be willing to understand that it's not about just the money, and it's much, much greater than that. Always will be. Always should be.
I love that. I think that is one of the things that's going to make the InfoSync ValeU partnership so great, because InfoSync has the same mindset when we look at our clients and our customer service. So I am so excited to be working with you, Joe, and I can't wait to see where we go and how we can help our clients succeed together.
Ashley, thanks so much. I couldn't agree more. And thank you so much.
So thank you for joining me today. And we'll talk soon.
All right. Take care.